Hey, it's Mike Watson with Keller Williams, and I wanted to talk to you guys today about why mortgage rates are such a hot topic for buyers in the Antelope Valley right now. And when I say right now, this has been the most sensitive time that I have seen in my 20 plus year career, where interest rates are just so impactful on the market. Right now, our home values are high and the interest rates are higher than what we're used to, and that is causing a buyer's monthly payment to be much higher than they are used to. And it doesn't look like we're going to see that changing anytime soon. So today, April 30th, they are supposed to be releasing the Personal Consumption Expenditures report. And why that's a big deal is because the PCE report is the Federal Reserve's preferred inflation gauge, showing what they're going to do with interest rates and why that's going to impact mortgage payments for buyers in cities like Lancaster and Palmdale when people are migrating here because the homes are slightly cheaper than what they're used to in Los Angeles. So last month when they released the PCE report, it told us, what the inflation was and what did it do to impact interest rates. And like you can see on the slide behind me here, this is a graph showing interest rates for this time frame, leading up to when the PCE report was released. And you can see that the interest rates didn't do a whole lot right there, right? But typically they use the PCE report, again, to engage inflation, and the PCE had a core increase just under 0.5% month over month, which is almost nothing. But the growth was about 2.8% year over year, which was a little bit hotter than was expected. With that, it led the Fed to stick with the higher interest rates that we've been seeing. So inflation has come down a bit, but it's not quite where they want it to be. These higher inflation signals to the Fed to keep rates steady, which is going to have an impact on the outlying cities outside of the Antelope Valley, like Tehachapi and Rosamond, because those are secondary communities to us, which get the overflow of buyers from the Lancaster Palmdale area when people are coming in from out of the area. So today's PCE report could influence mortgage rates for buyers if it shows that cooling inflation happens. So if it's lower than what we saw in last month's report, the Fed may cut interest rates, which could potentially lower mortgage rates. And that would be a big deal for buyers that are buying right now. If their monthly payment can come down, it'll either allow them the opportunity to now buy a home or have that home become more affordable for them. But if it shows, if that report that comes out today shows that inflation still remains high, we're probably going to be stuck with these higher interest rates through the summer. The reason why everybody in the Antelope Valley should care about this is, if you're a buyer, then it's going to have an impact on your mortgage rate. But if you already own a home and you're planning on selling, then this could have an impact on values. We've been with these high interest rates for a couple years now, and while home values have sustained, there is a chance that the buyer demand starts to decrease with the affordability not improving for buyers. And if the demand does decrease, that could cause home values to come down. I cover monthly statistics every month. I upload that to our YouTube channel. You can check that out. It's YouTube, and my username is at Mike Watson Realtor, and you can see that for all of the other updates that I do each month. Okay, so moving in from the PCE report, we're now going to talk about the jobs report. And the next jobs report is supposed to be released this coming Friday, which I believe is May 2nd. So if the job report comes out and it shows that there has been strong job growth, that would, also equal economic strength, that could keep interest rates high. If the jobs report comes out and is looking a little bit weaker, that might cause the Fed to reduce interest rates to try to stir up the economy and give it a little push start, if you will. So that report comes out this coming Friday. The last job report came out on April 4th. And you can see here on the chart behind me, also did not have much of an impact on interest rates. They did decline slightly the following week, but hardly even noticeable. So it looked like that the labor market could have been softening then, which again led to a slight decrease, which could be a benefit to everybody looking to purchase a home in Lancaster or Palmdale. Because it makes their payments cheaper for them. But if the job report shows that there's persistent strength in the numbers, then we're probably going to be seeing the higher interest rates, like I said. And so for buyers that are in the sub-markets of the Antelope Valley, and that'll cover places like Rosamond and Tehachapi and Bear Valley Springs and Stallion Springs, if the report comes in weaker than expected, again, they might reduce interest rates and that'll help. That could cause a rollover effect into those markets. If a buyer still doesn't feel comfortable buying in Lancaster and Palmdale, they might go, a little bit further north to Tehachapi and Bear Valley and Stallion Springs, just so they get, more home, more bang for their buck, if you will. We've seen that a lot, and Kern County itself is a bit cheaper than Los Angeles County when it comes to sales tax and property tax and all of the insurances like homeowners, auto, and health insurance are all a bit cheaper in Kern County. And so we do see a lot of people migrating from the Antelope Valley out of Los Angeles County into Kern County. So we'll see that report when it comes out this coming Friday. But while we wait for all of those things to come out, and those are the two big things, what should a buyer be doing in order to prepare for that? And the answer is always let's start planning ahead. I would recommend getting pre-approved with a lender. Pay attention to the market stats like we provide on our website at avwatson.com, or like I said, on the YouTube channel. I go over those every month. And just start getting a plan of action on what you want to do. You can call me, we can set up a time to discuss what it is that you want to do and what the best path forward looks like for you, and get you pre-approved and find out, if there's anything that you need to do as far as your credit goes or your income or any debts that you may have, just so you can fine tune all of that stuff leading up to the potential of buying a home. So there's one more thing that I did want to talk about, and you can see that there's a huge spike in interest rates, and that wasn't caused by either the PCE report or the jobs report. And it took me a minute to figure out what it was. It was the tariffs. It wasn't the announcement of tariffs, because that all stayed fine. But the following week, when they talked about reducing tariffs, that is when the bond market spiked and our interest rates went back up about 0.5%. So that's another factor that is pretty new to us in the industry. That's not something that has been really volatile in my career, like I said, for a little over 20 years, but that happened. And you can see at the tail end of that graph, it started coming down a little bit, and then the rates are a little bit cheaper today, even more than that graph shows. But those are all of the factors that we get to take into consideration when people ask, hey, what do you think is going to happen with interest rates? Let me pull out my crystal ball and tell you what I think, right? As of right now, I think that they're going to stay the same. We're probably going to bounce between 6.5% and 7%. And hopefully that allows the market to at least stay balanced, and that it doesn't start to soften too much. Again, this is a lot of information, and I know it might be Greek to some people, but if you would like to know more, or if you want clarification on anything, I would love to talk to you. Call, text, or email me, or visit our website or the YouTube channel and reach out, and I will talk to you guys soon. Have a great day.